Good afternoon, everybody. Welcome back to the Opportunistic Trader. It is about 11:30, and we're joined now by Commodity Research Group's Andy Lebow. Andy's been joining us regularly to break down the latest DOE energy reports and talk about energy market. How's it going, Andy?
It's going good, Michael. How are you doing?
Yeah, good. Been active. Some crazy markets. Crude's been in a bit of a downtrend. There's no denying it. I think this is the fourth or fifth straight down week. We're trading 77 bucks. We're just trading 65.80 before the inventory numbers, and just popped back up. Here we are at 66.42. I guess let's start out by talking about the actual inventory numbers themselves, and we'll get into crude.
Okay. I thought they were on balance constructive, mostly because of the product draws. Even though the market was expecting draws, I thought that they're a little bit more than expected. And we've been talking about this gasoline black eye on the market, the oversupply of gasoline, and now for the second week in a row, we've got a nice draw of 3.2 million barrels. So that's like eight over the last couple of weeks. So we're getting there on gasoline. Definitely in better shape now than we were 2 or 3 weeks ago. So I thought that number was okay. The distillate number was bullish. I mean, we drew 4 million barrels, so over 4 million barrels, and we're definitely on the low side on distillate stocks relative to the 4-year average. So I thought that was a good number. The crude number, that probably right in line with expects, up 3.2. We've been building crude stocks here over the last 4 or 5 weeks. We're up over 30 million barrels, say, over the last 5 weeks. That those builds are going to begin to start tapering off, and we'll probably see crude maybe net draw in November, and definitely draw in December, which is seasonal. So I thought on balance, Michael, okay, so constructive, certainly not bearish. And gasoline, we're getting there on gasoline, so that's a good sign.
Yeah, absolutely. So I see here crude is up 25 cents and RBOB is down about 0.5%. What are your thoughts about that short-term reaction?
Well, gasoline's up from the low, certainly. I think as I said, we're getting there on gasoline. Globally, we really have a long way to go. Gasoline is in surplus in Asia. It's in surplus in Europe, and here I'd have to say we're still. If I had to characterize it, I'd say surplus. So there's a lot of headwinds on gasoline, mostly because of diesel, actually.
So, what are your thoughts generally now for getting data? What are your thoughts? Here we are. RBOB is about buck 80. Crude's at 66.43. What's going to be driving us over the next week, and just even longer term than that? Is this the level to start getting long, or you think there's more downside?
I think there could be a bit more downside, but Michael, we've really seen some major liquidation on the net longs, for crude. I think it's down something like 120,000 or 130,000 contracts
Yeah.
of net length for the specs over the last, say, 4 to 5 weeks. If you look at the ratio, it's something like only now 4 to 1. The normal is say 3 to 1, so we're getting normal. So I think we see these big liquidations. You're always thinking, all right, well, maybe the liquidation's over, and it's time for the market. I think at the very least it may start evening out. Maybe I think this move down, and we're just going to just define the lower end of a trading range. Whether that's 63 or 64, or today's or the earlier low. I'm not sure. And then I think we're going to range in. We still have the sanctions begin in November, so the early November, so we'll see what's actually what's actually lost out of Iran. We'll get the numbers, and we've got a couple of OPEC meetings ahead of us. And the winter's still ahead of us. So the market may, it may brake, the market. We may start seeing the market even out here.
Yeah. Well, it's interesting. Looking back at crude, we had that one pop from, 72 up to like 77-ish. But other than that, we really, for the year, been trading like a 62, 72 sort of range. And we were for a number of months just going back and forth, back and forth.
Right,
And,
right.
here we are kind of right back in the middle of that range. And so typically, I think I saw we have Adam Collins from Movement Capital come on and do a COT breakdown and market seasonality, and he was talking about how November is typically a bearish month for energy markets.
That yeah, that could be. Of course, we've seen the market get really hit here in October. So November seasonality, yeah, it's usually somewhat soft. Your runs are beginning to come up, so we may see a little more. We may see gasoline rebuild, which is, I think market may be leery of that. But I don't know. I'm thinking more sideways in November than soft. I really am. Um,
Yeah.
so, because we've come off so hard. One thing that we spoke about last week, and I know the market is definitely worried about, and is part and parcel of the sell-off. It wasn't just all macro and all and all spec liquidation. I think the market was certainly nervous about the building inventories of crude. That was a big part, because it's grown about 1.5 times what many analysts thought. And it's looking ahead to the first half of next year. And as I mentioned last week, the first half doesn't look good in terms of the supply demand balances. In fact, it looks pretty bearish. So, I think that's in the back. I think it's, beginning just as we got closer to the sanctions, the market really started wringing its hands about the sanctions. As we get closer to the first half, close to the first quarter, you're going to hear more and more about market surpluses, even with the loss of the Iranian exports.
Sure. So, it's the last day of the month. I know that Commodity Research Group gets together with their big powwow at the end of every month and writes, a monthly report. What are you contributing on the energy side? What are your thoughts for the monthly
Pretty
report?
much, pretty much what I just told you, that I think the market is about to go into. I think it's going to range. I'm going to talk about where crude runs are going to be in November, where I think the crude stock balances and the product stock balances are going to be, by the end of the month. And a lot will be focusing on OPEC production, which is, I think, in the first half, is going to be possibly higher than it was in May, when the sanctions were first announced by Trump. So, obviously, we're keeping an eye on all that, as well as non-OPEC production, U.S. production, Russian production.
Has there been a
And
huge, what's the shale production like over the past few years, and what's expected for next year? Because I know there's been a
well,
lot of
next
controversy
year,
with it.
yeah, I mean, we're expecting that, or I think general expectations are another million barrels a day growth on U.S. production in both shale and in Gulf of Mexico. Permian is set to grow. The Bakken has really come on here in the last few months. Bakken production has really been surging. That's the North Dakota production, because of the Dakota Access Pipeline has allowed Bakken barrels to get out of North Dakota. So I think U.S. production up a million barrels a day. NGLs probably up another two or 300 after a 400,000 barrel a day increase this year. Infrastructure is still a big, is still a big story. Particularly in Texas, when the pipelines to get barrels out of the Permian, we should things should balance out in the second half of 2019, where pipeline exit capacity equals production capacity. But then we have the problem of export. How do you get it out of the country? We don't have enough export capacity right now for crude, which is why. Which is why there are all these projects on the board to build shipping facilities out of Corpus Christi. Another one announced yesterday by Carlisle. So we need capacity to get it out now, not only out of Texas but out of the country.
Right, but that's the interesting thing. So there, it sounds like we have the product, and which would be bearish for price. It's like you said, the capacity, and then you take a look just north of the border in Canada. Their prices are significantly lower because they have a ton of their own product that they can't get rid of either.
Right. I mean, you look at the differentials between the heavy Canadian crude. It's like $50 under WTI. I mean, that's because there's no, the marginal value. You can't get it out. So, is seeing rail demand increase and trucking demand. There'll be some pipeline capacity available in the second half of, maybe or maybe not available in the second half of 19. So, obviously it's a big, it's a huge issue for Canadian producers. And that, as you mentioned, Michael, that's bearish for price. This growing production here in the Americas. Mexico is net declining, but I think Brazil, which has been really disappointing this year, I think next year we'll start seeing some decent production out of Brazil. And in Argentina, they have significant shale deposits at Argentina, in a field called the Vaca Muerte, which is being developed, not as successfully as here in the U.S., but there's definitely a lot of emphasis there.
What's the process in getting oil from Canada to the U.S. and applying it? Is it the same exact oil product, or would there be like a refining process needed, and that would increase the cost to actually, use it, apply it the same way in our
Well,
vehicles?
there's conventional. Yeah, looking at Western Canada, there's uh, there's heavy. This is the tar sands. I mean, there's heavy crude that needs to be lightened. It's bitumen, needs to be commingled to lighten it up to move it into the pipeline. That is similar to that. That's in big demand. I mean, that's even though it's $50 under, if you can get it to the Gulf Coast, that's gold. I mean, that's really gold, because a lot of the Gulf Coast refiners, ironically, were upgraded in the 2000s, and like 2005 to 2012, 13, to run heavy crude. When ironically, what they really should have done is upgrade to run, or not upgrade at all, because they could run light crude, which is the U.S. shale is light. But a lot of refiners along the Gulf Coast can run that heavy crude. The reason they upgraded it was because of a lot of heavy crude came from Mexico and Venezuela, and no one could predict, that Mexico and Venezuela would, basically go down the tubes, while we had this boom, when they were putting these projects on the table, in the early 2000s or mid 2000s. Nobody knew that Mexico and Venezuela would literally go south.
I guess
You
that's the
could.
other thing. Where would Venezuela be if oil was, 30% lower, 40% lower than it currently is? I mean, that's the one they've got going for them right now in that,
Yeah,
that crazy
yeah,
country right now.
I know. I know, but their production continues to decline, and Mexico just bought some U.S. light crude. They just did this tender for U.S. light crude, which is you know, they've been talking about it for years. And finally they got it done with Phillips 66. They did a nice deal on importing light crude.
Yeah, absolutely. So, what do you think are the near-term catalysts over the next 10 days that we should be looking for?
Well, there's an OPEC non-OPEC meeting. It's early. Obviously the big story is the sanctions, right? So we'll start counting barrels. Venezuela. Iran is already down on their production, probably 700,000. Their exports are probably, similarly down 700 or 800,000 barrels a day, maybe more. We'll see where we'll see where it comes out. Michael, I'm a barrel counter, and I've been saying like 1.2, 1.3. Then I had to increase it to like 1.6, and now I'm thinking, maybe it's 1.8 that's lost because of these sanctions. So that's going to be a catalyst. Obviously, we'll be looking at some of the other markets where no kidding, right, Michael? Right? We'll be, we'll be
Absolutely, sure.
right.
But it has been
you know,
interesting. Crude has kind of like, even look at a day like today. S&P is a strong up day, and crude's just been underperforming. It's four straight down weeks. Regardless of, we've seen some large swings in equities, up, down. Crude
right, right.
really hasn't been moving with the general risk tone of the broader markets, is one way.
Yeah, I think that's a good point. Maybe the correlations aren't as strong as some of the other markets. And again, I really believe it's because the market is worried about the first half of next year. I think that's not only and this is a story globally, but certainly if growth is hampered at all by the strong dollar, higher rates, trade war, it immediately impacts petroleum demand first, right? I mean, because people are going to there'll be less demand for diesel, automatically, less demand for jet fuel, heavy fuel, et cetera. I don't think that's quite happened yet, but the market's watching that. And then there's this whole IMO deal. I don't know if you've been following that, Michael, where they have to change the specs for shipping are going to change in 2020, and that's going to be like the story in 2019. We'll be talking about that ad nauseum. We're already talking about that ad nauseum. But that's certainly something unfortunately we'll be watching, along with the change in ethanol specs. I mean, these in a way, are going to have very big the change in gasoline specs, allowing for more ethanol. Um,
How is that? The majority of cars in the U.S., are they going to be putting more ethanol in the cars?
yeah, they're looking at right now it's 10%, and they're
Going to
talking
15?
about 15 exactly.
When would that go into
Uh,
place?
That's a good question. That's unclear. Unclear. It might be as early as next year. Those rules haven't been written yet, and you know, the administration, I'm sure, has had has seen what it's like to get between the oil men and the farmers. It's not a good
Mm.
place to be. But I guess they're
Two
what they
angry
said,
groups.
right, what they saw, right, was all right. Well, there are more farmers that vote than oil guys. So heck with it. We'll go with the farmers, and increase the ethanol percentage.
Yeah. Well, we're going to be speaking on Friday with Ed Meir, and he'll be talking more about metals and macro, and also talking about the monthly letter that you guys are putting out for
Right,
November.
Ed's writing it right now. So over the next few days, and I'm going to start as soon as I get off with this call, Michael.
All right. Well, I'll let you
Start.
get to work. Andy Lebow, Commodity Research Group, thanks a lot for joining us, giving us the insight on oil, the DOE numbers, all that good stuff. Have a good rest of the day. Good luck with writing the letter. We'll talk to you soon.
All right. Thanks a lot,
All
Michael.
right, talk to you later.